Holmar's blog points out this morning, that's Omar. He says he just downloaded a Tesla software update over a SpaceX internet connection and posted about it on Elon Musk's social media platform. That's, there you go. There is the Elonosphere. Uh-huh. Well, Tesla is up $9.15 this morning in a market that's nicely up in the green, but nothing like that. And bond yields are also up. I expected some upward pressure on the 10-year after the announcement of the 50 basis cut, but not this much. So I don't think that's going to last, but we'll talk about that more later. Okay, this is from AI Driver this morning, and that's spelled AIDRIVR, no E, on X. He says FSD 12.5.4 is rolling out to both of my vehicles, a legacy HW3 model and an HW4 Model Y. He said, I want to say more. He says and then somebody else commented that they're putting out these updates really, really fast right now. I want to say more now about Gary Black's multiple posts. He's put up multiple posts now about how the narrative has switched on Tesla. Maybe that's why we're seeing $9 plus this morning on the upside. This change goes far beyond the obvious 10-10 event and the advent of robotaxi and the FOMO around that. The street is probably paying attention to that at this point. I really believe that. And I do expect this FOMO to carry us to 265 prior to 1010. And as of this morning, we are sitting at exactly at this moment, we are at 247.75. So 265 is not a big get between now and then. Gary's point is that the street is really looking at the return of large year-over-year sales and profit gains from introduction of the new vehicles, from the lower interest rate, from energy storage, all of that. That's what they're paying attention to. And, we might be looking at, he thinks maybe 25%, I forget his exact number, 25% increases in 2025 over 2024 in terms of unit sales, dollar sales, and profits. Well, they aren't building anything in, according to Gary, or according to what I can understand. They're not building anything in for the 4680 and for the IRA money that might reach $1 billion per quarter by early 2025, according to multiple sources. They aren't building anything in for the likely $500 million in savings from Optimus in the factories in 2025. That would just be with a couple of thousand Optimus in the factories. They might save $500 million in cost. They aren't even considering the impact on the sales or profits of FSD unsupervised as Tesla begins to sell every Model Y and Model 3 they can possibly make once we've got that unsupervised happening or even close. And they sure are planning for the 2.7 million cars sold next year, which is Elon's number. So we get 2.7 million cars. We've got a 50% increase in sales and probably profits on the auto division alone, probably more than that on the energy division, especially when you take into consideration the IRA increases. And then you've got all the money from FSD and the savings from Optimus, et cetera, et cetera. It's really going to be huge. On the other hand, Gary says this today. He says, I'm not betting on the 1010 robotaxi event to change the narrative since Tesla normally sells off following big events. If Tesla announces on 1010 that it's mastered unsupervised autonomy with a 99.994 efficiency offered by Google's current Tesla FSD efficacy, we would likely see our 270 price target. Well, I got a lot to say about that. Number one, I don't think that they need to have unsupervised autonomy in order to get to 270. I think they'll be 265 before the event. And then, well, let me hold off on the second part of my analysis here because AJ expects FOMO until 1010 and then a sell-off. And he says this is as long as retail investors think the event, oh, no, he didn't say this. I'm saying this. As long as retail investors think the event was successful, the stock will be up 3 to 5 days after the event. It might go down on the 11th, maybe even on the 12th. if the street doesn't get what happened on the 10th. But by the next week, by the Monday, Tuesday, Wednesday of the following week, no, the stock will be back up on a really good path again. That's what happens after events, all types of events. There is the sell-off right away, and then there's the slow march back up. So will we be above 265 the following week? Probably. Maybe 270, something like that. And then we'll see. It'll all depend on what the real news is on 1010. What do you think it's going to be? Let me know in the comments below. This is from the street this morning. I don't usually like the stuff on the street, but they're just quoting Goldman Sachs. Goldman Sachs analyst Mark Delaney, who reiterated his neutral rating and a 230 price target on Tesla, heading into the October event, said that the details Musk provides during the robotaxi reveal will be crucial. The timeline to begin commercial operations in robotaxis, including technological readiness and operational regulators, logistical considerations, and the business outlook, including how Tesla's cost structure might compare to competitors, will be key areas of focus for investors, Delaney said in a note published Monday. Remember, I've got this weird theory on how much to charge for robotaxi rides. I think more than you charge for, as long as you got good service. If you can show up in 6 minutes, 5 minutes, 4 minutes, as long as you give decent service, you should be able to charge more than Uber or Lyft because of all the reasons I've said before, not having to talk to the driver, not having to tip, all those kind of things. He also suggested that news of new low-cost Tesla model are released that investors have long encouraged Musk to pursue could be on the table at next month's Los Angeles event. Yeah, we might hear more news about the Model 2.5. Maybe, maybe not. Not really counting on it. He says whether Tesla provides more details or unveils the new lower-cost model at the 1010 event is also become a frequent topic of their investor discussions. Interesting on that one. But I think what you're going to see is that they won't announce it then, and they will have maybe not a big reveal party where you invite people and have a stage and the whole thing, but some kind of a, maybe like the reveal that they've been doing previously. Now, it depends on how big of a deal this thing is going to be. So maybe there could be a reveal in January. Anyway, I'm not sure. All right. This is from AJ Tourville, age, just like it sounds. China car dealers incurred combined losses of 138 billion won. That's $19.55 billion in the first 8 months of the year as they were forced to sell new cars at sizable discounts. This according to the China Automobile Dealers Association in an article today. Dealer inventories remain high amid sluggish consumption, forcing them to sell at low prices, the association said in a statement on a WeChat account. This despite the fact that Tesla's numbers are going up beautifully, and some people are expecting a big number tomorrow. We'll certainly be reporting that first thing in the morning at this regular time. By the way, if you haven't paid any attention yet, this is, yes, Randy Kirk. Yes. Please hit like, please hit subscribe, notify Brian White later this morning. Oh man, do we have a show planned? You're going to love the show today. And then, of course, Larry Goldberg will be here tonight. He's already talking about our show for tonight, so be sure to do that. And then Patreon. We need more and more and more people to join Patreon. All right. This is on the economic front this morning. Neel Kashkari, the Minnesota Fed president, said this morning regarding the neutral interest rate. He says, I write about that in my essay. Other people comment on it, and at some point, we're going to have to debate, are we getting there? I think that after the 50 basis point cut, we're still in a net tight position. So I was comfortable taking a larger first step. And then as we go forward, I expect on balance, we will probably take smaller steps unless the data changes materially. Now, you may have heard, you may not have heard, that there's an awful lot of talk and some big bets being placed on another 50 basis point cut in November, right after the election. That would be shocking a bit. And some people are reporting that if we do really end up with 200 basis points total, so that would be 100 and then another 100 over the next 6 months or so, that would be recessionary. It'd be another evidence of recession. Now, I'm not quite so sure about how recessionary that would be. Remember, we have all these weird things happening because of the massive influx of money that came just, during and after COVID. And so we're kind of, we had this the total number of increases in the rates, unprecedented, crazy, nuts, especially on a percentage basis. So coming down rapidly might not actually be as recessionary as it would be in a normal circumstance. We'll see what happens on all of that. 𝐄𝐦𝐚𝐲 says this morning that asset managers have never been so bearish on oil prices. Now, that'd be great. If oil prices go down more, there's a certain point at which it could be very, very helpful in getting the economy blasting off again, because it's like a tax cut. Short positions in Brent oil held by money managers now exceed longs by a record 12,680 contracts. I don't know how much more that is than normal because he doesn't say that. Positioning has fallen sharply from a net long of over 300,000 contracts in just 2 months, from net long 300,000 to net short 12,680. Now that does seem like a big deal. Furthermore, money managers are now the most bearish of diesel prices at 8.5 years. Now, some of that might be just overall demand dropping because China's using a lot less oil they're pumping a lot of electric cars into the market, and they're putting bunches of solar and nuclear facilities in place. And I think they're going to be using a lot less oil. And so whether even their economy is sucking also, but that's only part of the problem. Meanwhile, global oil demand rose by 800,000 a day in the first half of 2024. That sounds like a lot, but no, that's only a third of the growth seen last year. And demand in China is, as I just mentioned, struggling. In an era of high oil price, is the era of high oil prices coming to an end? Yeah, probably, but maybe not, because there's always going to be these interruptions. There's going to be hurricanes. There's going to be fighting. And we've got a lot of fighting happening right now between Israel and Hezbollah, in addition to the Gaza, in addition to all the other stuff that's going on, and yet oil is dropping. So right now, international conflict doesn't seem to be getting in the way of oil prices dropping a lot. All right, then this breaking just before I came on, flash US PMI composite output index, that's 54.4. August was 54.6. It is a 2-month low. Well, that's obvious. Anyway, this was expected, by the way. That was expected to see a little bit of a drop in the overall index. The services business activity at 55.4 compared to August 55.7. That is a little less than what was expected. I think it was expected to be 55.5. Flash U.S. manufacturing output index at 48.9. That is a jump from 48.2 last month, which is a better increase than was expected on manufacturing. But the manufacturing PMI came in at 47, down from 47.9. That is a 15-month low, and that was bad news. Now, how does that happen? How do you have the manufacturing index go up, but the PMI go down? Well, U.S. business activity growth remained robust in September, according to this survey, signaling a sustained economic expansion over the third quarter. Only a small loss of momentum, they say, was evident in September, but growth disparities persisted. A further solid expansion of the service sector contrasted with a second successive month of modestly falling output in manufacturing. A moderation of order book growth and a deterioration in business expectations for the year ahead to a near 2-year low reflected heightened uncertainty ahead of the presidential election. Companies consequently held back on hiring and allowed employment to fall for a second consecutive month. Optimism, this is the key here, optimism about output in the year ahead deteriorated sharply. The survey's future output index falling to its lowest since October 2022 and the second lowest seen this side of the pandemic. The deterioration in confidence was led by the service sector amid concerns over outlook for the economy and demand, often linked to uncertainty regarding the presidential election. In contrast, sentiment held up in manufacturing, shored up in part by hopes of sales growth and investment reviving from recent weakness. So you have the services folks going, yeah, getting a little shaky out there. You got the manufacturing people saying, look, it's been horrible for 2 years. Maybe we're finally going to turn the corner. I'm not sure we're going to turn the corner anytime soon. As you know, my feeling is that we are in and we will continue in recession until probably March, April. And it doesn't matter if Trump comes in, I think the recession will end earlier, maybe in February, March. If Harris is elected, we'll still get out of it, but it might take till April, May. It will have almost nothing to do with who's elected other than the idea that you still have more of the same as opposed to change. And the change aspect is more likely to stimulate consumers and businesses to growth. All right, that's my opinion. Whatever you think. All right, Tesla staying up above 9 at this point. It has now flattened out at around up 9 to 47.42. The Dow Jones up 66, NASDAQ up 52, S&P up 17. So, up, but barely up this morning. What we've got with the Mag 7 is that Microsoft and Apple are slightly down, and all but the rest are slightly up, like NVIDIA's up 3 cents. But Meta is up 8.28, but that's only like a 1.5%. We've got the Cathie Woods mostly down, fractionally small numbers, but PayPal and Square up, continuing to benefit, I guess, from the rate cut as well as the expected rate cuts coming. I also know that PayPal has been starting to offer some new services and whatnot that might be impacting their numbers. Okay, then let's look at the percentages. We've got the Dow up 0.17, NASDAQ up 0.28, S&P up 0.31, and Tesla up 3.83, continuing over $9. All right, let's go ahead and look at the bonds. And what we've got there is, this is the one that's kind of blowing my mind a little bit. Look at this, up 5.9 basis points on the 10-year at 3.787. Again, let me remind you, some pundits have said they think it goes back to 4. I just don't think so, but 3.787 isn't very far away from 4, up 5.9 this morning. The 2-year is only up 4.4, which is increasing that bridge. Now, a lot of people say that when it reinverts, one of the things that happens is that the 10-year goes up more than the 2-year, and that's what we're seeing right now. And the 2-month is unchanged this morning. So now we're seeing that under 100 basis points, and the 3-month definitely under 100 basis points at this point before it reinverts. But boy, that's still a lot. I mean, 100 basis points is a bunch. All right, let's take a look at the oil. This morning, oil up a little bit, 70 cents on Texas and 57 cents on Brent. You're looking at 71.70 for Texas and Brent at 75. That's still moving up each day. Kind of, it was around 68, now moving up. So not necessarily collapsing. Unlike the article that I told you about a minute ago, it's holding up pretty well. Natural gas going crazy, up 6% today at $2.58. You've got gold up $10. That's near its record high, might be at its record high. Let me just look real quick. No, that's not going to do it. I'm so sorry. I hit the wrong. Okay, let's look here. We have got gold. All right, let's move on. I don't know why I can't hit the right thing. Here we go. Okay, yes, up. That's a record high again at 2,656 and 40 cents. Silver down a tad, 0.78% at 31,255. And copper down 0.05%, so pretty flat there, 4.341. That's again a good solid number. The dollar is down against the dollar's down against the euro 0.23 and unchanged against the yen. We've got the Bitcoin up again this morning, 682. That makes it 63,644, and that puts it almost back into that old range. Not quite, maybe, but very, very close to being back in the range that it was in for a long time. I want to say more like 65 to 74, 60, it could be 64 to 74, around that. All right. Pre-market, I'm sorry, we don't need the pre-market. We've already done that. All right. Kashkari sees a slower pace of rate cuts ahead. So that's more comments from him, according to a headline that I'm looking at right now. All right. So remember what we got later today. We got Brian White. Very good show. You know exactly what's going to happen. It's going to be, yeah, you're going to like it. And then Larry Goldberg later tonight. Good news. Looks like it's going to be really good news Monday. But he's got some stuff he wants to talk about that's going to be fun. Then yesterday, what did I do yesterday? Oh, yeah, I had a bunch of clips and stuff yesterday. Yeah, what can I recommend? The morning show yesterday. I'll put that one. I'll put that card up. It was way better. That was the second half of the Warren Redlick. Now it was political, but I'll put it up again right here. By the way, it got over 100,000 impressions on X. So I think some people liked it. So you might want to go check it out. I'll put the card right there. And then if you think about it, go down below, do the pay. Oh, yeah, by the way, sold 4 Cybertrucks yesterday. If you need some Cybertruck bottle openers, that would be also helpful for the channel. So thank you very much for that order for 4 Cybertrucks. I think it was somebody who was reordering from before. Pretty sure of that. Okay. It's all great. Look at, one last time. Oh, yeah. I should look at it. Yeah, I should just check it out. See if we're still, look at that. We're now at $10.12, 248.37. Wow. Go Tesla. It's been great talking to you.